Good morning, and here are your top 5 stocks to watch out for in trade today. Well, plenty of numbers that will be declared today, and among the lot you've got Kotak Bank, SBI Life, Torrent Pharma and M&M Financial. A quick snapshot as to what to expect from Kotak Bank today. You've got the NII, which is expected at 3,780 crores versus 3,724 QOQ, PAT seen at 1,600 crores. The loan growth could improve sequentially. NIMs could remain steady. You are expecting low credit cost expectations, possibly 150 and 150 to 160 basis points, and provisions could remain elevated. Getting a move on, then let's focus in on earnings that came out on Friday and over the weekend. You had ICICI Lombard, which declared its numbers, where the PAT came in at 415 crores versus 307 crore rupees. You had the combined ratio, which stood at 99.7% versus 102.6%. The solvency ratio standing at about 2.47 times as on September 30th. Capital gains stood at 120 crores versus 69 crores YOY. Kotak Mahindra, then, that's another result candidate to watch out for. The dollar revenues coming in at $1,265 million, up about 4.8% sequentially. Revenue growth came in at 9,372 crores, up 2.9% on a Q-on-Q basis. The EBIT at about 1,331 crores, up 45% sequentially, with the EBIT margin standing at a healthy 14.2% versus 10.1%. Their new deal wins stood at about $421 million. Well, Morgan Stanley says that they maintain an overweight rating on Kotak Mahindra with a target price at 980, saying the strong margin improvement continues. Revenue was slightly better than estimates and the margin expansion was significantly better. They say that management sees the growth outlook improving in FY22. Yes Bank, meantime, came out with its earnings with a PAT at 129 crores versus a loss of 600 crores last year. NII at 1973 crores. Provisions came in at 1187 crores versus 1336 crores YOY. The asset quality improved to 16.9% versus 17.3% on the GNPAs, and net NPAs at 4.71% versus 4.96%. And Nestle came out with its earnings. Revenues up 10% at 3571 crores for Q3. The PAT stood at 587 crores, which was flattish, lower by 1%. Margins grew 115 basis points to come in at 24.95%. They said that there's been double-digit growth in their key brands, and that's been boosted by the in-home consumption. Reversal in the tax of the base quarter impacted their PAT. There's been strong performance in the e-channels, which has grown nearly 97%. CLSA has upgraded the stock to outperform from sell with a target at 17,650, saying that the concerns are fading and normalcy will aid going forward.